Hello, good morning students. See, this is our lecture number 6 of accounts, chapter number 1, introduction of accounts and its terminology, right? And in our last lecture, we complete up to the 39th terminology of the accounts. I hope you all read all the terminologies and see the videos again and again and understand all the terminology. If you have any doubts, then anytime please WhatsApp me. I will solve it at my regular time. Okay, see, in our last point, what is our last point? That is discount. And our next point, 14th point, that is discount received and discount allowed. But what is first of all discount? The amount which is deducted from the total amount is known as discount. What means of that? Whenever you are paying something to the creditors, or whenever you are receiving any amount from the customers, you allowed or you received any of discount, that is you are deducting some amount from the total payment, or someone, that is customer, also deducted some amount from the payment, then it is called a discount in simple word. Okay, there are two types of discount, that is first one is trade and the second one is cash discount. Okay, trade discount is never recorded, only calculated, right? And the cash discount recorded as well as calculated, that is deducted and recorded in the books of accounts. Now the next point is discount received and discount allowed. See, the name of the word is also said its meaning, that is whatever you are receiving as a discount, that is your discount received, and whatever you are allowing to the person as a discount, that is your discount allowed. See here, discount received is connected with creditors, or you can say with purchase, and discount allowed is connected with debtors, or you can say with sales. What is that? First of all, I am reading the regular term. Discount received, what is that? Which a businessman purchases goods and pays less amount which is not paid is called as discount received. See, discount received is connected with purchases. Whenever you are purchasing a goods of rupees 5,000, and at the time of payment, see, if you are immediately paid the cash, then it is okay. But if you are paying cash after some days, then you are the person is become a creditor for you, right? So whenever you are paying the cash, you are deducting some specific amount, and that is called discount received, because at the time of purchase you have to pay the cash, and you are paying the cash less of the main amount, and that particular difference of amount, that is called a discount received. At the same time, see, whenever you are sell the goods and the customer give the amount less the net amount, that is called a discount allowed. We are giving the discount, that is discount allowed. We are receiving the discount, that is discount received. Okay, so it is easy to understand. This is income of the business. Whatever we are receiving, the word received, we are receiving that, that's why it is our income. And whenever you are allowing a discount, it is our expense, right? Okay, example is given. Goods of rupees 10,000 purchased from Ramila Ben, and 2% discount will be allowed if amount is paid in 15 days. 10,000 rupees goods is purchased from Ramila Ben, and if I am paying in 15 days that particular 10,000, then see here, 10,000 I am purchasing the goods, I am purchasing the goods of rupees 10,000, and if I am paying this 10,000 within a 15 days, then cash discount, see, is received 2%. 2% of what? 2% of 10,000, that is 200. So I have to pay only 9,800, and this is called a cash discount, as well as this is called a discount received, right? See here, if 10,000 are paid to Ramila Ben within 15 days, in this case, instead of 10,000, you have to pay 9,800, right? After deduction of 2% on 10,000, and we will be paid. Now 200 will be treated as a discount received. It is a cash discount, and we have to record it, because always cash discount will be recorded. It is deducted as well as recorded. So it is recorded as discount received, right? This will be recorded in the books of accounts. Same thing, discount allowed. Reverse of this, whenever we are selling the goods and customer allow a 2%, we are allowing a customer 2% cash discount, then it is discount allowed. What is that? When businessman sells goods and received less amount which is not received is called as discount allowed. Okay, this is expenses of the business. See, discount received is an income, discount allowed is an expenses for the business, because we are receiving a less amount, that's why it is our expense. Okay, this is expense of the business. Example, goods of rupees 15,000 sold to Kalpana Ben. If amount is received in 10 days, see here, I am giving the condition that if you are paying me in 10 days, within 10 days, then I will allow you 2% cash discount. On which? On the sales amount, that is on 15,000, right? 2% discount will be allowed. If the collection received from the Kalpana Ben within a 10 days, then 15,000 into 2%. See into the calci. 15,000 into 2%, that is 300 is your cash discount, and you are receiving 14,700. So that is 300. That is your discount allowed, and that is your business expenses. Okay. So here 300 will be 14,700 will be received. Now 300 will be treated as a discount allowed, and it will be recorded in the books. This is our expenses of the business. Okay. So here discount. See, two types of discount: trade discount and cash discount. In cash discount there are also two types, that is discount allowed and discount received. One is our income and the other is our expense. So here all the topic of discount is over. Now the next one. See, I hope you all read these 1 to 46 all the terminology 2 or 3 times. If not, please read again and again. Otherwise it is very hard to understand, right? See this video, all this video of the terminology 2 to 3 times, as well as you have to read this 1 to 46 terminology 2 to 3 times or more than 5 times. Okay, and then you can understand this terminology. Here we are completing in this lecture, I think so, 46 all, and also I will complete this chapter in this lecture, maybe. Okay, so continue with the point number 41. Depreciation. What is that? Depreciation is an expenses of a business. See, every year the value of the assets is reduced by certain rate, and amount which is reduced is called as depreciation. See, for depreciation word there is one chapter, full chapter of this word, that is depreciation, in part 2 of 11th standard. So we will discuss about it into that point, at that point. Okay, so what is depreciation? See, in the simple word, whatever amount reduced by using the assets, in the value of the assets is decreased or reduced by using the assets, that is called depreciation. See, I will give you here one example. If I am purchasing a new bike from the showroom, okay, and after for 15 days or after 1 year, I want to sell it, right? Or after 10 days, see, it is just after 10 days I want to sell it because I dislike this particular bike, okay. So at that time the value of the assets is decreased. If I purchase this bike in 60,000 rupees, then after 10 days the value of that particular bike is 55,000 rupees. So reduction of 5,000 is called a depreciation. After 1 year, the value of that particular bike is 50,000. So 10,000 is the reduction in the price is called a depreciation. So whatever rate is reduced on the assets value, that is called a depreciation. Okay, and we will discuss in detail in the chapter number 2 of part 2, that is depreciation. See, it is called depreciation. Before making tax payment to the government, depreciation is deducted. Depreciation is non-cash expenses of the business. See, depreciation is expense, but we don't have to pay any cash regarding this. That's why it is called a non-cash expenses. Okay, so here it is completed. Second 41 point, that is depreciation. Now 42. What is bad debts? See, bad debts means what? If I have to receive rupees 5,000 from Mahesh, right, and he refused to give me any amount, so that 5,000 is become a bad debt. In simple word, whatever I have to receive is not receiving, that is called a bad debt. Now see the word, see the main definition. When goods sold to a on credit by the business person to whom goods sold is debtor of the business, right? See the process here. Write down these in your fair book. Whatever writing on the board, you have to write in your example book. See here, the process is our last debtor bills receivable example. Ramesh, the owner of the business in which in the books of which we are recording the accounts, right, sold the goods on credit to Naresh. So on credit, that's why he become a debtor of Ramesh. Now at the time of, that is after 5 or 10 days, condition is there, after 5 or 10 days Ramesh want their money and Naresh refused to pay that money. I have no money. Okay, so at that time that 5,000 rupees is become a bad debt. That means if debtors refuse to pay any amount of them debts, that is called a bad debt. See, in 5,000, not full amount. If sold goods on credit of rupees 5,000, but Naresh refused to pay 500, that means he is giving only 4,500 and he refused to pay rupees 500 from 5,000. So here 500 becomes a bad debt to Ramesh. Okay, so here whatever, when goods sold on credit by the business person to whom goods sold in is debtor of the business, from him the amount of sales is to be collected, right? Many times debtor of the business may not be in the position to pay full amount. See here, Naresh is not in a position to pay 5,000 full. He is paying, see here, he is paying only 4,000. So here 1,000 is become a bad debt to Ramesh, right? due to his weak financial condition. If the amount is not collected even after the necessary efforts, underline these words. If amount is not collected even after necessary efforts, that means one time Ramesh go to Naresh, two times, three times, four times, or many of the times, but Naresh did not pay the 1000 rupees, remaining 1000. See, he paid rupees 4000 immediately, but he didn't pay rupees remaining 1000 after 4 to 5 times. Efforts of Ramesh, that means here 1000 is become a bad debts. See here, necessary efforts is compulsory, right? And then it will become a bad debts. An amount which is not received is known as bad debts. But bad debts is not an expense of the business, but it is a loss. See, it is not expense. Whatever expense, what means of expense? Whenever you are receiving some benefit from the person, from the services or from the goods, that means it is our expenses. See the definition of expense. Whatever benefit is received from the service or from the goods, that is called an expenses. Here 1000, for not getting 1000, that means it is not any benefit. We are not receiving any benefit from Naresh. That's why it is not an expense. It is a loss of the business. Okay. So now it is complete the next point, that is bad debts. We are continue with the next point, that is 43, solvent. What is solvent? See, in accounting, a person who pays his financial obligation regularly, that is whatever he promises to pay to the someone, to any of the creditors, and whatever time he is paying at the regularly at the fixed time, then he becomes a solvent. When we can say that he is a solvent, he is paying their dues in time to time, that is regularly. So he is a solvent, right? And whose assets are more than its liability, then that person is known as solvent person. See, what is that? Assets is more than its liability means what? If I am doing a business regularly, I am purchasing the assets, and I have also a liability to pay someone, that is creditors and all these things, right? So whenever if I want to shut down or I want to wind up my business, at that time whatever assets I have, I am selling that assets, and from that selling of the assets, whatever amount is received, I am paying all, I can pay all the dues, that is all my liabilities, and on any amount is remaining, then it is called I am a solvent person. That means what? Assets, my business assets is more than it's my liability. Whatever I am receiving from the assets, I can pay all these liabilities, all these dues, and some amount is remaining. That's why I am become a solvent person. Okay. So it is known as solvent person. And what is insolvent? See, the simple is thing, assets is less than the liability. Whatever I am selling at the time of winding up, the whatever assets I am selling, from that particular assets amount is received, I cannot pay my dues or liabilities, then it is I am a insolvent person. What is insolvent? Now, according to a person who doesn't pay his financial obligation regularly, it means he is not in a position to pay these obligations, and whose assets are less than its liabilities. See, it is the opposite of solvent. See, at the time of winding up, if I am selling all my assets, and if the amount received from that particular assets, I cannot pay my regular liability or regular dues, then I am an insolvent person, right? Okay, that person is known as insolvent person. Unless the person is declared insolvent by the court, he cannot be treated as insolvent. See, this is a legal procedure. See, what is the legal procedure? First of all, I have to declare myself insolvent into the court. Court come to the court when one person of court is come to my business, so all my assets and liabilities, sold all assets, pay some liabilities, and then if there is nothing in my assets, then court is declare me an insolvent person. He give me a permission, or you can say a certificate of insolvent. Then and then I will become an insolvent. I cannot declare myself, that is I am insolvent, I cannot pay any dues, I cannot pay any liabilities. I have to go to the court, request to court that give me a certificate of insolvent, and then court give me the insolvent certificate, then and then I will become an insolvent. Okay, so it is a legal procedure, and it is also known as treated as insolvent person. Unless the person is declared insolvent by the court, he cannot be treated as insolvent. Okay, so the next word is debit and credit. What is that? There are two important words of accounting. See, there are two important words. First one, in each and every transactions, or you can say in accounts, two words are most important at each and every time. That is debit and credit. What is that? We understood that here. Every transaction has two effects in double entry system. See, the word double entry system actually says that each and every transaction has minimum two entries, or you can say minimum two effects. First effect is debit and the second is credit. First, debit and credit. True and fair understanding of debit and credit is true and fair understanding of accounting. That means if you want to know about accounting, you first of all know the debit and credit word. After the understanding of debit and credit word, you can understand accounting. Otherwise, you cannot understand accounting. So now in accounting, two sides are used. See here. See, this is a pro forma of account. See here, there are two sides. First particulars amount, then the second side particulars amount. See here, one side is over here. So this is the two sides of account. This one is called a debit side, and you can write in short form DR, and this one is, you can say, credit side, and you can write in the short form as CR. Here debit side, here it is a credit side. Now see the definition. In accounting, two sides are used. The left hand side, see, this one is the left hand side and this one is the right hand side. Left hand side of the account is called debit side, and the right hand side of the account is called a credit side. Okay, any account to be debited means accounting treatment as debit side of account, that is the treatment as on left hand side. Whatever we are recording on the debit side, that is on the left hand side, that is called a debiting. We are debiting that particular account. And if we are recording on the right hand side, then we can say it is a credit effect. Right? Two effects. First is debit effect, second is credit effect. First two sides. First side is debit side, second side is credit side, and you can say left hand side is a debit side and right hand side is a credit side. Okay. So in other words, if you can say that whatever benefit is received, see, it is not given in the textbook. Write down this, that whenever you are receiving a benefit, it is debited, and whenever you are giving a benefit, it is credited. See, I am paying a salary to my worker, right? I am paying salary, 5,000 salary to my business worker, right? And on the consideration of this 5,000, I am receiving a 1 month skill of that particular person, or you can say 1 month service of that particular worker. So I am receiving in 5,000 some services, so I can say that I am receiving a benefit, and 5,000 I am paying. That's why that 5,000 is debited as salary account, because salary is the expenses of our business. So in simple word, you can say that whenever you are receiving any benefit, then that account should be debited, and whenever you are giving some benefits, then that account should be credited. See, if I am receiving if I am selling a goods of rupees 10,000 to someone, to my customer, what means of that? I am giving a benefit to that particular customer, whatever goods he want, right? And he received that particular goods. That means I am giving a benefit to my customer, and I am receiving an amount, an income. That's why whenever I am giving a benefit, that account should be credited. Whatever I am paying the benefit, that account should be debited. Okay. So this is the simple word. This is the simple meaning of debit and credit, and it is also important each and every time in the accounts. So you have to compulsory do this, and you have to compulsory read and remember all these two words, that is debit and credit. And the last one, that is 46th, account. Account means what? See, this is the pro forma of account. In debit and credit, I am also explaining you the account. What is account? See here, business transactions pertaining to certain items and persons who take place frequently. Means what? Ramesh sold the goods to Naresh. The simple example. See here. And Naresh is giving a promise to pay these rupees 50,000 in 15 days, right? Ramesh sold goods on credit of rupees 50,000 to Naresh, and Naresh give the promise this amount to pay to Ramesh in 15 days. And in the books of Ramesh, see, Ramesh is the business owner, and I am writing account in the books of Ramesh. Which account we have to prepare? Naresh account. In the books of Ramesh, the debtor, the person that is a debtor of Ramesh is Naresh, and we have to prepare a Naresh account. See, whatever a frequent transaction is done with a particular person, and we are recording all the transactions at one place, that is called an account. Simple word. See, first time Ramesh sold the goods to Naresh. Here we are recording that Naresh is the debtor. That's why sales rupees 50,000. See, Naresh received the benefit, right? and I am selling, that is Ramesh selling the goods to Naresh. That's why here 50,000 is recorded here. Now after 2 days, Naresh sent me a 10,000 rupees, or you can say Naresh sent to Ramesh only 10,000 rupees in cash. So here cash 10,000, right? Then after 3 days, he sent a check, that is bank, of rupees 30,000. See, whatever transaction done with a particular person, and we are recording all the transactions with the particular person at one place, at one account, that is called an account, right? See here, first of all we are selling the goods, then we are recording 50,000 as sales, then received after 2 days 10,000, here we are recording 10,000. After 3 days we are receiving a check of rupees 30,000, that is we are recording 30,000. And after 15 days, see, the condition is to pay this 50,000 in 50 days. That means after 15 days again we received a cash of rupees 10,000. So here transaction with a particular person is over. 50,000 we are selling the goods, and first we received 10,000, then we received 30,000 check, and then we received 10,000 at the last, and total 50,000 we received. Here our transaction with particular person is over. Now again the next transactions, after 15 days Naresh come to us and want goods of rupees 30,000, and we are giving him a 30,000 rupees goods. That means I am selling the goods, Ramesh selling the goods to Naresh rupees 30,000 on credit. Then here again the goods is 80,000, and what we can say, balance 30,000 we have to, that is Ramesh have to receive rupees 30,000 in balance after 10 or 15 days. See here, this is the example, this is the practical example of account. And now I am reading the question, reading the point. Business transactions pertaining to certain items and person would take place frequently. These transactions may be of debit side having debit effect, this one is the debit side having debit effect, and maybe of credit side having credit effect, this one is credit side and he having a credit effect. Transaction pertaining to respective item or person is recorded at one place, and from where the summary of the transactions of that item or person can be obtained, it is called an account. See, we are selling the goods first time 50,000, then second time 30,000, and we are receiving 10, 30 and 10 from Naresh. So here 50, 30, 80,000 sales, and we are receiving 50,000, and the summary of that, that is we have to receive 30,000 after 10 days, that is we have to receive in balance, that is 30,000 rupees. So whatever summary we are receiving from that person, that is called an account at one place, right? Assume that goods are sold on credit to her, it is called an account. Example, Puspa Ben is a customer of a business, right? Goods are sold on credit to her. Assume that credit sales are made 20 times in a year. Here the credit sale is made for 2 times. Here in the example it is made 20 times in a year, full year, that is in 12 months, right? And she also settled her account 20 times. Here they settle account only one time. 50,000 is settled here, 30,000 is remaining as a balance, right? Now there will be 20 into 2, 40 transactions with Puspa Ben during the year. 20 times here, see here the how many transactions? 2, and these 1, 2, 3 total 2 plus 3, 5 transactions with Naresh. Here in the example 40 transactions with the Puspaben during the year. All these transactions are recorded at one place in the books of accounts. Where all these transactions are recorded is called Puspaben's account. Here all the transactions with Naresh 2 and 3, all the transactions with Naresh recorded in one account, that is called Naresh account. Okay. Puspaben is a person, thus it is a personal account. It is a personal account. Naresh is a person, that's why. Right? Like personal account, goods account, assets account, income account, expense account, etc. are also prepared. Right? Person account, it is also prepared. That goods account, or you can say assets account, whatever assets I am purchasing or selling or using, that is we have to write in one place, that is called assets account. Goods, whatever goods I am purchasing or selling, that is called goods, or you can say stock account. Right? Income account, whatever income I am receiving, that is called income account. Whatever expenses I am doing, that is called expense account. All these accounts etc. are prepared, also prepared as per the rules of accounting. Even if there is one transaction's respective account is to be prepared. Whatever transactions we are doing in our business, we have to prepare that all the particular transactions, all the accounts, that is whatever effect, that is debit effect or credit effect, we have to prepare all the accounts, whatever transactions we are doing in our business. Right? This terminology makes the subject of the study easy. See 1 to 46. These all 46 terminology, and I think there are also some terminology which is remaining, but we are doing in our regular course. But here the main 46 terminology is easy to study our subject, that is account. The terminology clarify meanings of the concerned topics so that there is no space for any controversy. See, if you don't understand this terminology, you don't understand accounts. That's why I always request you that please read again and again, and please see the videos, these all the videos again and again. And if you have any doubts, then ask me personally. I will solve your doubt. But this terminology is very useful in the accounts. So if you don't understand these, very many controversies here produce. So please don't be lazy. Please do this again and again. Terminology has significant place and importance in every branch of education, right? So let us know about the types of accounting system after having studied the meaning, the characteristics, and many of the other things of accounting. See, terminology of all these accounts, that is over here 1 to 46 terminology. And see, we don't see here, see that characteristics and meaning and the uses and the benefit, limitations of accounting, because it is not useful right now. Only terminology is useful in our further studies. That's why in this chapter we just show that this terminology only. These methods of accounting, types of accounting, we are seeing in our next chapter, or you can say in our next lecture. So here I am completing my lecture, as well as see here this chapter is also over. You have to read these all and you have to write these all into your example book. Okay. So in our next lecture we will continue with the chapter number 2, that is dual effect of transactions and types of account. See, it is a somehow 50% a practical chapter, so it is now not a boring lecture of account. Okay. So in the next lecture we will continue with the chapter number 2. Up to this, read all and write all. Okay. Thank you, class.